Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and I'm here one more time to share with you the key points to analyze what's going to be the impact on the market in this occasion of the PCE inflation rate published this week on United States. Not only that, the GDP review, the growth rate GDP review on United States economy. So in this video, you're going to see, first of all, a review of three different macroeconomic factors that could determine what is the position of the Federal Reserve in relation with the market. Second, we're going to review also the last fresh update from the last week in terms of Federal Reserve. What is the feedback of the members of the Federal Reserve in terms of the interest rate decisions, which, as you know already, it determines the cycle of the market. And finally, I'm going to share with you the charts, my charts, SP 500, and also dollar index and euro dollar. And I'm going to show you my projections of what I believe is going to happen in terms of price movements. Now, saying that, first of all, click on subscription button and give me a thumb up if you like this content. And also click on the bell to receive notifications anytime we update new market points. If you like by the end of this video the content, also leave me your comments, give me your feedback so I will know what exactly is your preference. Main variable, growth rate, GDP growth rate, above 2.3%. Last one, it was Q4 2024, review to 2.3% growth rate in United States economy. Comparing with France economy, comparing with German economy, comparing with British economy, so good. So I will say US is the top one in terms of growth rate in the G7 economies. And therefore, the main question is still there. Does really Federal Reserve need to cut the interest rates with these numbers? We bring me to the next point. Initial jobless claims. How is the labor market situation in United States? And as you can see, we can see a kind of equatorial line, about 225,000 jobless claims. And most of the time, the result is below those numbers. And therefore, unemployment rate is 4.1%, super low, really low compared with, again, another top economies like German, which is about 6%. So my question remains, does really the Federal Reserve need to cut the interest rates? And now the third variable is the PCE inflation, the one that is the key factor we're expecting. As you know, PCE inflation is the favorite ratio by Federal Reserve, so therefore they're going to keep the eyes on these numbers this week. Now you can see, before the inflationary crisis we got in 2021 and 2022, we also were keeping the inflation below 2%, which is follow the manual and follow the book of economy, the ideal scenario for the economy. The problem is, since then, we have seen how the inflation has been decreasing really well from 2023 to 2024. But since summer 2024, since August 2024, we have seen how the inflation has been little bit rising from 2% to 2.8% right now. Now, the problem is, if the inflation is not going below 2%, not only that, if inflation is getting what they call sticky right now, we got a problem. Because follow the manuals of economy or monetary policies, you cannot cut the interest rates in an economy with inflation is rising. So therefore, you got the key point right here. If the PCE inflation this week is rising, is above the expectations, probably is going to cause a breathing from a monetary perspective in sense like, no, Federal Reserve cannot cut the interest rate. It doesn't matter how many times they say they will do it. They cannot do it if inflation is rising, period. Saying that, if they cannot cut the interest rates, we got a problem. Now, what was the last feedback they gave us on the Federal Reserve meeting to review the interest rate cuts last week? Well, I bring to you a few comments here. The Fed keeps the policy rate unchanged in the 4.25 to 4.50% range, but 9 of the 19 policymakers expect it to be in the 3.75 to 4% range later this year. 9 over 19, almost 50% of the policymakers in Federal Reserve are still expecting keep cutting the interest rates. There was substantial disagreement among policymakers on the appropriate path forward, reflecting uncertainty. And this is the debate I was suggesting in our previous data, the ones we just shared with you. So if the numbers are not there, they cannot openly say they're going to cut the interest rates. Not only that, take a look on what it says the President of Federal Reserve, Jerome Powell. Emphasize a cautious approach, stating we are not going to rush into rate cuts, indicating a deliberate and patient strategy. He also addressed inflation dynamics, noting that inflation has started to pick up. Here we go. Partially in response to the tariffs. Not true. Not true. Inflation is rising since summer 2024. By then, in summer 2024, August 2024, it was Biden administration. It was not tariffs whatsoever. So therefore, we cannot address this issue to Donald Trump tariffs because it started in summer 2024 with Biden administration. Another point is maybe it can get worse with tariffs, but this is another topic. So therefore, as you can see, it's not completely 100% clear that the Federal Reserve can cut the interest rate. They want to do it. They send that message to the market because the market, Wall Street, want interest rate cuts because it means more liquidity. But the truth is, based on the numbers, they cannot openly cut the interest rates. And knowing that, let's take a look on the chart. You got the mini SP500 futures on the screen. As you can see, the end of the last week and even this week has been good. Good evolution. We have left behind 5,600 points. We have left behind 5,700 points. And finally, we are quoting about 5,800 points. Good, super good. The problem, as soon as we get close to 6,000 points, even in the levels I put on the chart, you can see 5,900, 5,950. All of these levels is an important, massive resistance. So therefore, as far as going above those levels, if we see the SP500 getting close to 5,900 points, is a red flag because we got a new resistance area. And therefore, if the PCE inflation is above the expectations, probably that is going to be a turn point for the market, dropping again below 5,900 points. In terms of dollar, you got the dollar index here. And as you can see, there is a movement between 103.25 to 104 range. But now, this on Tuesday, the dollar was breaking up those levels, and therefore is right now on a support of 104 points on dollar index, which could move the price back to the previous levels a couple of months ago. If that happens, pay attention to the next chart, euro dollar. Super bearish pattern in euro dollar, because if that happens, it means that forget about 108, 108.50 is dropping to 107 and even to 105. This level, 105.25, 105.25 or 105, simply like that. So that's the potential targets. And again, this is a scenario if you see a PCE index published in United States that show us obviously an increase on inflation rate and therefore a risk of, or let's say, new obstacle for Federal Reserve to keep the interest rate cuts forward, right? Well, that's all. I hope you enjoyed this video. And again, I hope you find useful for your strategies. If is that the case, please leave me comments below on the bottom of this video and share your feedback with me. Give me a thumbs up if you like it and subscribe to the channel. Take care. Bye-bye.